All right, you're good to go.
Jason, we're live.
You're good to go. Yep, you're live.
Good morning, everybody, or good afternoon, good evening. Oi-Yee, I know we're all over the place, literally, for this panel here. The topic, we got global adoption and regulatory arbitrage. Very cool name, and we have a good purpose for kind of calling it that. First of all, everybody, I'm Peter Gaffney, head of research at Security Token Advisors. Great seeing everyone on the panel today here and everyone in the audience. You know, STA is an advisory consulting firm, so I lead a lot of the research initiatives and working hand in hand with the asset managers and the infrastructure providers in the legacy capital market space to pretty much implement tokenization and ideally start working with industry partners, much like yourselves all here on the panel. I figured a quick round of intros and then we could kind of hop in. And I think the main goal and, you know, what we hear from the audience and from our clients is really, you know, how are different industry players taking advantage, not taking advantage, but how are they making use of their own, you know, geographic location, the jurisdictions, how are they working with regulators, and overall, what's the kind of traction, the feedback they're seeing, any particular use cases standing out, and then, you know, the eventual collaboration between all the parties here. So, you know, we'll just kind of go down the line. Oi-Yee, do you mind starting it off with an intro on yourself and ADDX?
Sure. Hi, Peter. Hi, everyone. Great to be with you all this evening. My name is Oi-Yee. I'm the CEO of ADDX. ADDX is a alternative investment platform out here in Singapore. Of course, it's built on a blockchain platform. We're actually a fully regulated, licensed by MAS as a capital markets dealing in securities, a recognized market operator for the exchange, as well as the custody side. So we've been operating now for about 4+ years, though the company is about 5 years old, and we tokenize all sorts of funds and credit and pre-IPO shares and structured products. Glad to be with you all this evening.
Fantastic. Thanks for the background, Oi-Yee. Jacobo, why don't you talk to us? How are you doing and what are you doing at Deloitte?
Yeah, great. Hi, everyone. Nice to be here with all of you. I'm Jacobo from Madrid, Spain here. I'm from the Deloitte firm in Spain. We, as you know, we're a leading global professional services firm, so I think we're the different ones here. And our efforts regarding tokenization are offering end-to-end professional services. So from helping companies to define their strategy in how to approach these security tokens ecosystem. So this is shaping their vision, where to play, how to win, etc., to providing light on regulation, to helping in issuances, helping with the tech part of it, leverage on our technology or partnering up with some tech providers and so on. So we focus on professional services and tokenization.
Fantastic. Thanks so much, Jacobo. Lorenzo, tell us about yourself and about BlockInvest.
Hello, everyone. It's great to be here. Lorenzo here from Italy, Milan. I'm the founder of BlockInvest. We are an infrastructure provider for financial institutions to adopt the tokenization for real, I would say, of real-world assets, particularly with focus on corporate bonds, on fund shares, and on something that I don't know why no one won't touch, which is non-performing exposure. So the bad loans. So these are the three main underlying in which we are focused, and we are working with several financial institutions, but also with regulators in Italy with this brand new law to, assist our client in adopt the tokenization and use this new transactional layer for this underlying. And just for Jacobo, we are working in several pre-production projects with Deloitte in Italy. So for sure, you're part of the game, even if you're a consultancy company in a really complex project. The consultancy part is really important because when you need to disrupt the financial market, you need to connect the dots in different services especially when we talk about the banks. So really glad to find you here.
Fantastic, and great to hear about the collab already. And finally, Graham, why don't you tell us a little about yourself and about Archax?
Sure. Hey, Peter. Yeah, thanks for having me. Great to be here with you and the panelists. So I'm Graham Rodford, co-founder and CEO of Archax. Spent about 20 years in hedge funds, most recently as Chief Operating Officer and Chief Compliance Officer of one here in London. Got interested in crypto in about 2013. Started to realize around 2017-ish that this technology was going to change every instrument out there, not just cryptocurrencies, but every single instrument that we trade. Kind of figured if that would happen, institutions would come, they'd need credible partners, decided to be regulated. So set up Archax in 2018, went to the regulator in 2019. In 2020, became the UK's first regulated digital securities exchange, custodian and broker, and got our crypto asset registration as well. So spent 5 years building, I think, whilst watching the other spaces take off. Obviously digital securities has been a bit of a slower pace, but I think now we're at a point where we're starting to see a lot of traction in everything we're doing. So looking forward to talking through it all.
Fantastic. Thanks, Graham. And just so to clarify, just to give everyone a baseline. So Oi-Yee, ADDX is primary and secondary capabilities, correct? Okay.
Yeah, that's right.
Okay. Lorenzo, BlockInvest is primary? Like primary issuance?
Correct. No, we are in the primary phase. We can make also secondary market, but not yet like ADDX can do that for regulatory constraint, at least in South Europe. So
okay, perfect. And Graham, Archax is both primary engine and secondary MTF, or maybe in the works?
Yeah, no, exactly, with an underlying custodian as well.
Right. Very, very powerful stack. Awesome. And Jacobo, I'm sure you're seeing a blend of all these through your own clients and kind of different partners. But listen, it seems like everyone more or less has a different regulator. There's some overlap, I'm sure. It's a global marketplace. It's tough to stay in just one location as a whole. And I'm sure, we have MAS, we have FCA, we have ESMA, I think on the call that someone in way, shape or form is answering to and has to stay in line with. I think the first kind of, easy question and trying to focus a bit more on the business case rather than the raw compliance guidelines. Is there anything notable, and we'll just kind of go through each panelist, anything notable that your specific regulator is working with you guys on or kind of helping mold? And that could be, a certain product type, a certain asset class, or just certain, sandbox capabilities or movements along those lines. Anything stand out in a very positive way that you're able to share?
Yeah, I'll go first. I think MAS is sort of a little bit beyond asset classes. I think they see tokenization applying across the full securities and funds spectrum, and whether it's to consumers or at least to accredited investors in Singapore, or it's B2B, they're pushing that very hard via this project called Project Guardian, right? Yep. And Guardian is meant to be, it's a steering column of about, I think, 13 or 14 financial institutions, which have tokenization initiatives. So it's actually most of that sit with the global banks and the regional banks. We're one of probably the only fintech startup that's within this committee. But really, the idea is now no longer just about the asset class. It's actually about interoperability among financial institutions and across fintechs like ourselves. So it's a great initiative. What they're doing right now is not only are they pushing very aggressively on the technology and how do we connect as different, because everybody's built on different chains, but also they're starting to apply a bit more thought as to what might be the regulatory evolution for some of these areas that we need to think about.
Yeah, very interesting. And Project Guardian, JPM's involved, the HSBC is involved, DBS Bank, a laundry list, let's say, for a few years now. It's some extremely impressive and frankly, just industry beneficial initiatives happening out of Singapore, and a lot of that to thank is due to MAS. So good background, Oi-Yee, thanks for that. Lorenzo, curious with you and the Italian regulator and some of your work.
I mean, for sure, Singapore is more advanced with respect to Italy, but I mean, with respect to the past in which also BlockInvest was involved in tokenization, mainly in Luxembourg or in UK.
Oh, yeah.
But now we are working seriously in Italy with the regulator because especially the Bank of Italy, launched this call for proposal initiative dedicated to the blockchain. And I would say that 3/4 of all the biggest financial institutions are involved. So in different use cases, we are, launching this kind of project with the direct support of the Bank of Italy. So the support on how integrate the tokenization with existing AML and KYC, or integrate with the new infrastructure layer that is going to substitute the centralized repositories. So we are going in very little detail on what this means, tokenize an asset class. And there are different tables depending on the asset class. So we are involved mainly, as I was saying, in the bonds and the NPLs. There are other tables on the secondary market structure. So how to translate a classical MTF into a tokenization world, or also table dedicated for digital identity, which is something that is also really, really important, at least for what we think. So it's really interesting what the regulator is building here. And they are doing that because there is a huge market interest. With respect to the past, all the main financial institutions are investing time and resources in this kind of project. So,
interesting. The digital identity piece we'll have to come back to that, because that's definitely a hot topic. It flew under my own radar for quite a while until it was coming up in every other call. And it's really something that has to be solved for, right? Whether you're even looking at things in a single country or region, just on a single platform, but obviously more widely across different jurisdictions. And as things become more global in nature, it'll be extremely interesting to see how that kind of plays out. So I think we'll revisit that topic a bit. But Graham, even you over in the UK, and you're doing some interesting work, I know, with Aberdeen, looking at FTSE listed equities and even government bonds, curious what that looks like with the FCA and everything over there.
Yeah, no, I guess, the history of the FCA, I think like a lot of regulators about 5 years ago or so, I think regulators were kind of spooked, and a lot of them rushed in some regulations, which probably could have been better, but actually probably overall started us heading in the right direction of putting appropriate regulations in place. So I'd say we always iterate in the right direction. And whilst I think they can always be improved, there's no doubt the trend is into a kind of more stable, regulated environment. So, we've had various crypto consultations across a variety of topics recently. They've adjusted the financial promotions rules. Before that, it was around money laundering. And now there's a wider consultation piece, which looks like crypto assets or unregulated crypto assets will move more into the regulated sphere. So I think all that's heading in the right direction. And then we've also, much like Europe, started to put in place a financial market infrastructure sandbox. And that will be interesting. What that's starting to do is saying, can an MTF, which is an exchange in the UK, act like a central securities depository, or potentially the other way around? Can you have a record of ownership uniquely existing on blockchain rather than the CSD? So that's something we're watching pretty closely. I'd say overall, though, like Singapore actually, and a few other jurisdictions, the UK is looking to be a global digital hub. And that really only works if you have a really stable regulatory environment that can attract people. So I think we've got larger problems in the UK around bank accounts and other infrastructure issues for crypto asset related companies at the moment. Actually, I think the regulation is heading in the right direction.
Cool. No, interesting to hear, and kind of that history of how, what was kind of pushed out just in recent times and how it's evolved. Good point about the CSD too. I mean, that's something we hear in the States, looking at the transfer agent side and what the SEC deems a source of truth and what it doesn't. And right now, at least on the private fund side, or rather on the public security side, a lot of that is being, routed through transfer agents. So I think it'll definitely take some time to kind of unhinge that. Although, of course, a lot of even blockchain foundations are looking to solve for that themselves directly. So definitely some stuff to keep an eye on. And Jacobo, in Spain, more recently, I know TokenizeThis is working with REITs in Spain. That was something pretty notable within the country itself. Very curious what your clients are looking at, what Deloitte specifically is looking at. I'm sure you guys work quite closely with the regulators. Like, what is their take? How are they looking to compete with the rest of Europe, if at all, or if it's more of a collaborative type thing?
Yeah, actually, it's important to note what Graham was saying right now, because here in the European Union, we have a common regulatory framework. First step, that is the DLT pilot regime, to set these multi-trading facilities and waiting on the CSV part of the value chain also. So again, we have this common regulatory framework, so it's not that much of competing against the rest of the European Union, but to actually collaborating, because we part from a common regulatory framework. It's a pilot, actually, so it's a bit limited on issuances and allow trading. So actually, in general, the goal is to foster experimentation and to show the benefits of the DLT use cases while preserving investor protection, market integrity, and so on. So we have this common framework. And then in Spain, or some European Union countries have transposed this pilot regime to local regulatory frameworks. So I like to put into value too the effort from the Spanish regulator that went farther than expected in pilot regime, this pilot I was talking about, because it provides like greater legal certainty to tokenization by seeking to equal security tokens to their traditional financial instruments. So they are equaling it in terms of warranties, charges, encumbrances, lies, and so on. So they expressed this in the proper regulation. So of course, the regulator is still learning together with the projects we have also in our national sandbox, and that we will go to the pilot regime in the European Union with all these evolving matters. So they are pushing towards exploring tokenization and just putting into value this effort from also Spanish regulator.
Okay, so in Spain, would you say it's everything is still in like sandbox mode, more or less?
Yes, it's like the first step. Like, we're seeing some sandbox projects, some pilot projects. We're seeing some biggest institutions going to tokenize bonds, tokenize debt, and so on. But these are experiments. We're seeing some serious or real life projects, but they are all starting. We're seeing associations or joint ventures between financial institutions and, for example, illiquid asset owners, as for example, real estate developers that are, let's say, partnering up to build these issuances and trading platforms here in Spain. We're seeing some native startups or crypto-native startups trying to build these platforms, and also to aim for being secondary market trading platforms. So we're seeing kind of everything, but of course, everything is in its initial steps right now.
Okay.
Let me add something on what Jacobo said, because I think it's really important to underline that probably it will take much more time for Europe, but the common regulatory framework that now it's a pilot, but it's going to be a common legislation which will put Europe, in a very interesting position, also with respect to US, let me say, for what's happening in this month. So it will take a bit longer. For example, in Italy, we were, at this stage till May the 10th. So the local regulation was applied by May, so it's relatively new. I know that in Spain, we are also close. But for what we analyzed, also together with Deloitte, actually, is that in Spain, in Italy, in France as well, the national regulation are not so different. So this will give us an interesting position in how to build a real collaborative environment. So we are also planning with other startups to use the same standard to build together a sort of secondary market. So it's something that Euronext probably is not able to do with centralized authorities, but we can use the blockchain to do that. So I think it's a huge occasion for European companies in the next years.
Okay, interesting. And that's a great point, Lorenzo. And you mentioned just thinking about the different standards to create that. I'm actually curious if are there strong guidelines or preferences to certain blockchains or certain blockchain mechanics, within your regions, let's say. I'm aware of certain foundations, certain agencies are limiting things to either private chains or kind of extremely permissioned to start. And I know that's a common thought process from certain banks and institutions, just as they kind of dip their toes in. But I'm very curious what the regulators themselves are saying. Is it cool to use public chains? Is that kind of something that is slowing them down? You all have established services up and running, and I'm very curious to hear what that is kind of like, if it's feasible, if you're hitting roadblocks on the tech side, any color you're able to share with the industry.
Yeah, this is a great point, because it was a nightmare at the beginning. Because at the beginning, the private blockchain was the suggested one. But I mean, with time and patience, we explained to the regulators, but also to the financial institution that, what a private blockchain can do, probably a database can do better. So the real innovation is done by a public ledger. For sure, you need to explain why you're going to use that blockchain and what standard you're going to apply to respect the obligation that the national regulation will impose. But now I would say that now they understand that the real innovation is the use of the public blockchain. For sure, you need to show them that it's sustainable. So and sustainability not only for the environmental impact, so you need to say that it's, a layer 2, so you are carbon neutral or carbon positive, but also that is scalable. And we think that using a private network is not scalable, because it's something that we are already doing in finance. So
we're on the same page as Lorenzo there. Like it's, I think, across I think all of us probably on the panel were chatting to a wide range of clients and potential clients. And you can see why banks want to work in private and in permissioned walled gardens effectively, because they're a bit uncomfortable. But I just, whilst I'm happy to work with them, I can't see how that fulfills what I think this technology can really do. And I completely agree with Lorenzo. You need, like, public blockchain is where this is at, and it can be permissioned. You can create subnets. You can do a lot of things with it, but having the whole world of developers building interesting and innovative developments on a chain is so much more powerful. If you look at all of the things available on Ethereum, it's quite remarkable, all of the side chains that have come off of it, wallet infrastructure, borrowing, lending, DEXs. It's going to take a long while for the banks to catch up on that. And all the while, I think they're going to start to be disrupted by new people moving into the space. I actually have never had a conversation with the regulator, other than them asking if we had a preference. I've never had a conversation really where they expressed a view of a preference of one over the other. I think what they really care about is that appropriate AML KYC source of funds is done on all of our clients and everything we do. The fact that you can see transactions is a bit more of a problem for the types of clients that we occasionally speak to. And potentially sometimes the way that these chains raise their money can be an issue for some people. But the fact is, whatever financial rails you're talking about the world over, there's institutions that use it, there's non-institutions that use it, and a public blockchain can be used for good, for bad. Shouldn't necessarily rule out anyone. So, we support both, but I'm very much in the camp of public is really where this thing takes off in the future.
Yeah, I agree with Graham. I think the end goal is public. But I think regulators sort of need sort of different developments of sandboxes, as it were, right? And right now, if for the piece of scalability that at least in Singapore the regulators are very focused on, is around sort of making that interoperability work. And at the moment, it's sort of like everybody has this little chain, right? So you kind of got to figure out how to connect that. But more importantly, for at least in the Singapore context, because it's not just about securities. Actually, they're thinking much broader and how the full financial services settlement system is actually going to sit on fiat tokens, basically, and the securities. So I think they do have to solve it, whether public blockchain or you figure out some really, really neat way for interoperability to happen across TradFi and DeFi. I think it'll take a while, but you can see that where they want to head in the end is probably the most efficient and the most elegant solution is the public chain. But I think there's still a lot of elements, KYC, AML, all of that, right? Securities, laws, how do you bridge that?
Interesting.
I think to add a bit more on that, I think regulators and everyone has concern on privacy, scalability issues, but mainly on ensuring all KYC, AML processes, as Raham was saying. So it may be easier to control all these on private blockchains, at least at the beginning, because we're starting to see some token standards that actually do all this. But also, to the point on the settlement, as regulators see the settlement and ensuring the delivery versus payment of these tokenized securities against probably a wholesale CBDC. So it's difficult maybe to ensure all these DVP against a wholesale CBDC on public environments. So that's, I think, one of the points. It's also important to consider permission blockchains at this moment, because if not, you could even do this with tokenized deposits or stable coins. But from what we're seeing, I think regulators are more on, or they are starting to explore all these DVP against wholesale CBDC. So that's a point in which I think permission blockchains will stay, at least for the moment.
Yeah. All great points, all four of you. And even now I'm curious thinking about it, Oi-Yee, I think you mentioned, and Ram, you mentioned the KYC AML side. Aside from regulators, let's just talk individually from a business side. What are, you're all working with institutions, with big players. How are they kind of viewing you? What are the hurdles that, even onboarding them? I'm sure you're getting past the comfort level, but really onboarding and meeting their criteria internally. Is there any color, anything you could shine on that? It'll be interesting to see how it differs just around the world, but more so in platform to platform. Like, how is Hamilton Lane and Partners Group working with ADDX? How is Bank of Italy, Credit Agricole? How are they looking at BlockInvest, Aberdeen with Archax? A few examples. What are those conversations like? And are they helping kind of set precedent for future, I don't want to say competitors of theirs, but for future companies of similar profile?
Yeah, I'll start first. I mean, I think we make it a little bit too easy for them. They don't really see the technical part of that, right? I mean, we literally sort of, act as if we're one of their distributors, and we mechanize the whole back end of that. I mean, that's what they like. They see the digit, and interestingly, and it's not just about the tokenization. Actually, for them, it's about the digitization of the distribution process for them. And how that suddenly, you're redrawing how an investor should be operating on a digital platform, and the subscription process, and how it actually could, be very, very efficient. How distributions could be extremely efficient. How you can keep a ledger, and you understand who is your investor base at any one point in time. So they're not particularly wedded into the tech and how that works. And certainly that, I think, should evolve over time. I think in Singapore, at least, the thinking around market infrastructure is increasing. And so how does then the whole funds world, both at a mutual fund level and a alternative fund level, become increasingly digitized and tokenized? So that's a bit more the thematic here. And I think if we can figure out the full value chain, because now we capture a very small part of the value chain, right? The supply chain. really, when you are able to tokenize fully the fund, and all institutions, including high net worth, are all on the chain, that's, I think, when the technology will really fully express its efficiencies and its capabilities. But we're very far from that.
Yeah, we're in the on the AML KYC side. I mean, we're fully regulated. There's nothing kind of special about what we collect. How we collect it's probably a bit more advanced than some of the traditional institutions, I guess. But kind of to Oi-Yee's point, and a bit about digital securities, especially if you kind of think about what crypto did, how freely transferable it is, the types of markets that open up. That's kind of the dream for asset managers, really. They'd like to be able to tokenize the fund, have it flow between us, ADDX, BlockInvest, Securitize, wherever around the world seamlessly. And, you know, abiding by local regulations is one thing, but also solving this global AML KYC challenge is another, whether it's, you know, having some sort of global whitelist, using something like an ID in a wallet, like Securitize ID, have the one actually, you know, something whereby everybody can contribute, and having some globally acceptable standard would definitely help these. And whenever you've seen something in DeFi, you know, like I won't name anyone, but let's say DEXs that have tried to launch walled garden versions, they just get no traction at all, because most people don't want to give up their AML KYC to a DEX. You have limited participants. You don't have anything in the liquidity pool, so they just develop no traction. And I think it's all linked, actually, the kind of the distribution, the uptake, the AML KYC, kind of, if we can solve that at a scalable size, not just on our local level, but internationally, then it will start becoming really interesting.
I have to say that for us, it's a bit different, because as a software provider, in some cases, with the distributor is easier. With the API that they can manage, and the distributor bank can just plug and play. But with the arranger and with the asset manager, that there is also sort of integration that is required. And I can share with you that I remember at a conference call with more than 40 people just from the compliance of the bank, just for the bonds, just the team bonds. I don't even imagine the number of compliance in general. So it's the difficult part is not the tech. I totally agree, but it's how you connect the dots. And I think that since I agree with you that if we try to put all the data related to the financial transaction on the blockchain, probably every blockchain will collapse. So the best way we found is actually link what is really worth to put on the blockchain, so something that is meaningful for the transactional part, with the legacy system. For sure, it takes a bit more time in terms of development, in terms of integration. But for example, probably we come back on it because it takes a while to explain. For the KYC AML part, most of at least for the big financial institution, they want to give up their own process, their own screening. So what we are doing is providing them like a summary of this process. Everyone will keep its own process, and we are listing 5 to 10 attributes that will flow into a token. So it's like a soul-bound token that basically, at least for Europe, will define the MiFID profile. So the attributes like risk exposure, the category of underlying for which you can be accredited, like for example, you can invest in a real estate, but not in non-performing loans because it's more dangerous, or a derivative token. So put on a token, on a soul-bound token, what can be useful to understand whether or not you can make this investment. But all the rest of the data, all the compliance will remain, at least for now, on the legacy system, and we are finding the best way to integrate our stack, the Web3 stack, with their Web2 infrastructure.
That's a very interesting point, Lorenzo, you bring up. It's something we talk about fairly often, about what to put on chain versus what to leave off chain, maybe API call in. And we've heard stories, I'm sure we're all familiar, even with companies who've issued, if there's something let's say you find some error that was baked on chain, you got to burn all the old tokens, reissue. It's a cost. It's definitely an expense. Or should something change in the future, you definitely want some ability, and it kind of goes against the crypto thesis, but you may need some ability to modify certain either even financial benchmarks or even personal info. So thinking about the digital identity challenge, so even let's say if I'm not an accredited investor, if that's baked on chain that Peter is retail, let's say 2 years from now things change, what do I do? How do I update my profile? Is that going to cost me to update things on chain? Is there a way to API call where we're off chain verifying and then it's just kind of getting verified? So these are things to think about kind of moving forward as the whole digital identity, especially from a global standpoint, begins to change and kind of formulate a bit more. And even like with all the progress and zero knowledge proofs and stuff on the digital asset side, that's a very strong argument for putting more things on chain about your own identity and it kind of remaining more or less closed off from certain parties. But still, I think it's like a whole rabbit hole that even I still have to go down to talk more about. That's kind of more the surface level thinking. But, curious if there's any other thoughts on that. I was actually pretty interested in something I didn't even think about asking before, Graham, until you mentioned it. You mentioned different DEXs with like compliance. It's something we've heard from our advisory side and certain, industry players who are looking at this. Do you guys see any near-term integrations with decentralized finance and tokenized securities, or is that still way off? I mean, considering where the regulators are and licensing needed and how to really delegate, if you're running an MTF, how do I know only permissioned MTF investors are swaying down into a Uniswap type? Curious if you guys are looking at that or if it's just way off.
Yeah, no, I mean, we're looking. I think quite the shape of it, I don't know, but I think the future is a DEX of some kind. If you think about the journey that we've gone on as well, so talking about the Aberdeen money market fund that we've tokenized recently, and also we've tokenized some UK shares, UK gilts, a few other bits and pieces as well. Kind of what's the point in all of that? Well, the point isn't just the kind of fractionalization, liquidity, and all these points people talk about that I don't think is the main point. The thing is upgrading the technology of all of those instruments. And when you think about everything happens that in the decentralized space, it's the same technology. So pretty much everything that exists in DeFi can be applied to digital security. So the way that we're looking at it is we've created permissions tokens. You can pretty much create replica copies of most of what exists in DeFi today, apply our tokens to it, and there you have it, a fairly regulated venue. Now, the difficulty comes around the detail, actually, when you start talking about transaction reporting, market surveillance, market abuse rules. These kind of things, kill switches that you have to have on regulated venues. It's all the kind of, they're called RTSs in the UK, regulated technical standards. They're the harder things to apply. Kind of conceiving of it and getting the base level stuff in, that's pretty easy. It's when you get into the detail of making sure you do right by the regulator at every point, that's where these things take a little bit longer. But I'm pretty sure you'll start seeing them first half to third quarter of next year. I think a lot of people are looking at this now.
Interesting.
If you see what's happening, I mean, at least in the Singapore context, the focus is still the regulated entity is going to be sort of held by the neck, right? Like sort of, I mean, the regulators want to be able to hold someone responsible. So as a collective, even if we do sort of, well, at least combine or connect with any of the DeFis, I'm not sure. But I think the regulators will still want to make sure that the regulated guys are responsible for what they're doing. So I think it would stay relatively mainstream, is my sense.
Yeah, sorry, to be clear, I couldn't agree more. The concept of a regulated DAO, that's difficult and that's a long way off. I'm talking about, it's very clear Archax runs this DEX. It's centralized and we kind of control who can participate or not. But yeah, I couldn't agree more. I think I see it already in some of the things we talked to the regulator about. when it's a DAO, they don't like that there's no one to go after. So I think we can use the technology, but there's going to be a centralized element to this for a bit of a while.
Interesting point. And Graham, even to that, if let's say Archax is running the DEX, do you think your clients would be open to providing liquidity, or would it be a pure, we got to bring additional investors onboarded and have them act as liquidity providers? I'm curious.
No, I think you look at the way it's working. Like, in the UK, to be a market maker of a regulated security, you need to be regulated as a special type of broker. I think that still exists. The question is whether they stream liquidity in, or they provide it via an AMM or a liquidity pool. Like, I think they're the interesting questions. But I think they will exist, and I think actually there'll be more people participating, because a lot of these things can be kind of naturally algorithmic. So I don't really have the same liquidity concerns that a lot of people do around security tokens. The way I think about the whole space is, a lot of these things have tons of liquidity in the traditional market. They're all moving onto this technology, and that liquidity will come with them. Something that was illiquid before is probably going to be fairly illiquid on a new technology. But I think you start moving tokenized Vodafone, Tesla, Apple into a DEX where people can operate, there'll be liquidity there for sure.
Awesome. Interesting points. And listen, we have a few minutes left. Very curious, and thanks so much for all the insights. I know we went off, not just looking solely at regulation, but it's always interesting to hear what business cases are happening kind of behind the scenes. I would love to hear, and kind of for the audience, even for each other, what is the, anything that you're able to share, of course, what's like the near term, the midterm roadmaps look like for each of your, your firms, your services. I think there's a lot of people watching, and it'd be nice for them to know if they have to get in contact with you, if they have projects that kind of align with your vision, with your areas. Feel free to kind of take the stage.
Okay, I will start first. We are working together with a lot of other projects here, always because our idea is to build together an ecosystem, to co-design the euro on chain, because the cash lag, particularly for some business case, the bonds and the open-ended funds, so the fund shares are, it's fundamental to adopt and exploit full potential on the blockchain. It will take probably a lot of time to have a proper CBDC, but we need to work on something in the middle, because in euro we don't have a stable coin. And I will say that even with the stable coin, for many use cases will not be enough, because you need central bank digital money to invest, or when you collect the money from the market, especially in open-ended funds. So it's something that will involve also BlockInvest and other parts of the Italian ecosystem together with the regulator. This is the first goal. And after that, we're going to launch probably the first native tokenized fund in Italy. It will be really hard, but it's something that we're working on. So finger crossed.
Awesome. That's a good point about the digital euro too, in waiting. I was going to say if there's any good settlement mechanisms or anything, but we'll be covering money markets, treasuries, deposits later in today. Actually, we do have a quick question I want to sneak in before we wrap up. From Alex, we like to use the phrase "no bad bonds, just bad prices." How do you guys think about liquidity and return? Meaning, providing T-bill liquidity at 5% might not be interesting. There is a cost of liquidity. However, providing real asset liquidity at 10% might be interesting. Have you guys looked at these markets, I guess, in the real estate space?
I'm sure over the last 5 years, we've spoken to a lot of people tokenizing a lot of things. And there's a bit of a negative selection bias, I think, to a lot of people that have come to talk about tokens, in that they didn't necessarily raise money previously, and then they come to a token, so it still can be difficult to raise money. And whenever we've looked at these projects, trying to distribute them in scale and then bring them potentially to a secondary market, which is seemingly what a lot of these illiquid assets want, is actually a bit of a challenge. There is no doubt there are people out there that are interested in a 10% return in real estate asset. I mean, Aberdeen has funds full of them, but is there an advantage right now of them having a token? No, I think there is, but I've been living and breathing this for 5 years. But when you speak to most real estate investors, it's a bit of a struggle to distribute to anyone else that's not already buying it. So I think there's a big opportunity there. There's a lot of these residential products that struggle to distribute. That's what I see.
Sure.
Yeah, I agree with Graham. I mean, tokenization doesn't mean that the product suddenly becomes appealing. At the end of the day, I think the investment profile still needs to sit with the right type of investors, right? And it could be very local. So there's a localization bias for investing as well. Japanese investors love Japanese real estate. Could you ever sell a, Singapore residential? Probably very difficult. So the projects still need to match the demand. And tokenization may facilitate that. It may open up a slightly different sort of angle and a slightly different capital pool, but I don't think it completely, you can't sort of repackage an ugly asset. But I guess a 10% yielding asset is still relatively interesting. But it does need, the marketing still needs to be very targeted, is my point.
Absolutely.
But you touched a great point, because it's a common misconception that you take a bad asset and if you tokenize it, probably it's easier to sell. It's not. Especially when you talk about real estate, the underlying should be valuable also without an internet connection. Okay, so forget about blockchain and tokenization. Instead, this kind of solution, as far as I think, are more valuable for very complex and structured processes rather than invest in a residential property, because I will never invest probably in a residential property in Japan because I don't know the market. In Milan or probably Madrid, but it's something that I would say also the crowdfunding can do. Instead of tokenization is really powerful for complex structure that you can decentralize, you can optimize. So this is where I think the tokenization will find its place in the next 5 years. But now, I'm one of the guys that tokenize basically everything. We tokenize a lot of real estate assets, but in long term, I think that it will be dedicated for other things.
Sure. I take this stage here to put the self-promoting stuff. And of course, you need to tokenize good stuff. So linking with the previous question on the roadmap, we as a consulting firm help on these issuances, all this financial study that is behind it, and structure and where to list it and so on. So just to link it with the previous one, and we as a consulting firm partner up with these tech providers that we have here. And we work with these financial institutions to work on this European pilot regime and regulators and central banks. Actually, with everything we've been discussing today in this panel, all that was previously discussed as KYC, MAL policies, and so on. So I think this issuance part is really important because you cannot tokenize everything, even though you can, from a technological point of view, we think it doesn't make sense sometimes. So it's important to tokenize assets that are healthy, at least, let's say it like that.
Awesome. Fantastic responses and insight. Listen, this is all we have for this panel. Really appreciate everyone's time. Thanks so much, Oi-Yee, Jacobo, Graham, Lorenzo. Looking forward to chatting with you each more in the future. And hope the audience enjoyed. Thank you all so much for your insights.
Thank you, Pete. Thanks, everyone.
Thanks.
Bye-bye.